Good day, ladies and gentlemen. It's Eric Coffin. I'm speaking to you from the 2019 Metal Investor Forum pre-PDAC in Toronto, March 2019. I'm here with Patrick Downey, the CEO of Orezone Gold, and they put out an update on their project Bomboré a few days ago, about a week ago, and there's quite a few moving parts. So part of that release was a discussion of the new scheduling you're doing, because you're bringing in this sulfide study, you're bringing in some more ounces that were excluded from the mine plan before, and essentially you want to kind of be able to lock all this stuff in, I guess, and I'm not so much redo the feasibility, but at least be able to sort of bolt this stuff on.
Yeah, exactly. Well, the feasibility was done at 4.5 million tonnes per annum on the oxides, so that will change as well. That goes from 4.5 to 5.2 right off the bat. Okay. With minimal capex. In fact, I would think even going from 4.5 to 5.2, based on all the information I've seen to date, because we're in detail engineering right now, I would expect the capex to come down. You know, we use Lycopodium. They're the West African mine builders of note. They're just building Ity for Endeavour. It just announced under budget, ahead of schedule. They're building Wagignon for Teranga, same thing. So we have live prices from everything that's going on in country. So we're able to update all of that. And what we wanted to do on the schedule was a number of things. We wanted to optimize the schedule from our project cash flow expenditure point of view, make sure that we weren't doing things ahead of our time. You know, we looked at the earthworks schedule, and just on the way the timing was for the RAP, we could have ended up starting our earthworks in the rainy season, which is not ideal, and particularly when you're a single asset company, you got to get it right. Yeah. So that was part of it. The other part of it was we're dealing with banks on the debt side of things. They're quite excited about what the sulfides will look like from the point of view of cash flow, and it allows us to, by just pushing things out a few months, get that sulfide study done to feasibility level, which then their independent engineers can review, and it just changes the overall debt tenor for us. So it's very important in that regard as well. So
and the sulfide study is coming pretty soon? Yeah,
the sulfide study, we're essentially complete. We're in the mining scheduling now. So you know, we just figure out from the point of view of when is the optimal time. It's about a $30 million capex. I would say it's a simple circuit. All we're doing is adding a crusher and a SAG mill and some pre-aeration leads to the circuit, and then it joins the oxide circuit. So nothing, no further capital, no further tailings, no further water supply or infrastructure. So it'll be ready in June. You know, really all we're waiting for now is to get that all the final water balances done, so we submit everything to the government, and then we put out our 43-101. So I'd expect all the results of that in June. I would say it's going to add plus $100 million to our NAV.
Nice.
Yeah, very nice. Look, it's good grade. Yeah. You know, that's one of the things we know it was important. We were working on P17 last year. Yeah. We knew we were hitting good grade. Knew we were getting continuous hits. But you have to still give it to the independent geological resource and reserve guys to go through that. We now know what those numbers are, and now we're doing the detailed mine planning.
Okay, so what can we expect, say, in the next 3 to 6 months? Basically, the sulfide study.
Well, the resource update first, which will include the restricted zones. Okay. And the new sulfide. So these are the new sulfides. I would guess that would add somewhere in the region of 400,000 mineable ounces into the mine plan. And then the sulfide study right after that, and then we'll be, you know, probably updating all of our. The sulfide study will include the update on the oxide capex and an overall mine development plan. I would hope, you know, we would be adding another 500,000 ounces of recovered gold with the sulfide. So we're adding another 50% to our recovered ounces.
Okay, and what does it change? Do you think the mine life changes, or does it take more?
Mine life will stay around about 11, 12. I mean, what you know, a bigger company, if it came in, it would probably look at building. We've only taken the sulfides down to 90 meters.
Right.
And simply, Eric, that's the reason for that is 2 of the pits are only drilled to 90 meters.
Right.
They're wide open beneath it. And we just south of that, where we have drilling down to 240 meters, we know the grades and thicknesses are the same.
Right.
So, you know, with some more drilling in the next couple of years, you could see another 4 or 5 years of mine life. So you'd be looking at, you know, 15 to 17 years of mine life.
Okay.
And probably 2 million recovered ounces.
I mean,
very attractive
That changes
project.
things quite a bit. I mean, I think you always want to be, or it seems like you always want to be, if you can, up in the plus 100,000 ounce a year. That seems to be the hunting ground for a lot of the companies.
Yeah. No, definitely. I think that when you look at it, you know, when we put out the press release on the feasibility study, the number of inbound calls that came from the mid-tier producers, oh, what are you guys up to now? Could we come look at it? Right. We're holding back a little bit on that because we want to get the mine plan and the economics done internally. Right. And likely we would open data rooms for, you know, the sort of West African mid-tier producers. You know, we think that that's a real viable option for us as well. I mean, if you look in the market, if you're a single asset producer in West Africa or anywhere, you're going to really trade at 0.5 to 0.6 times NAV. Right. If you're part of a larger entity, you're trading at 0.9 to 1. And the passive funds, which are 50 to 60% of the market these days, can trade in your stock. Yeah. So it's an important thing to look at from your shareholders' point of view as well. Okay. And bearing in mind that pretty much everybody in our company in the senior management level and the board level are all significant shareholders of this company. We do focus on NAV per share. Yeah, you do a lot of buying in the market, Patrick. Well, we do, but we see value there. Yeah. You know. And just one thing, just to close off, I know it's not an issue. I mean, I've followed the company a long time, and I've never heard about any sort of incident. But I know we both know with a couple of things that have happened in eastern Burkina in the last couple of months, a couple of tragic things that I'm sure it's probably something that comes up. Do you want to just speak to? Yeah. Well, first of all, I think it is tragic. It's really sad in that regard in terms of losing life. You know, from our point of view, let's not cover these things up. And there is a hot area around the Niger-Mali border. I think the Burkina Faso government, because it's never really been violent. They're not, you know, they call them Chrislams, where they intermarry Christians and Muslims. Right. So they weren't really ready for that influx that came out of the Malian type of pushback. And we don't see it at all. We are 80 kilometers from the capital. Right. We're on a paved highway. There's 2 main roadblocks to get to our mine site. One of the biggest gendarmerie stations outside of Ouaga is 5 kilometers from our mine site. And the Army target practice shooting range, which is quite well used these days, is literally right outside our gate. Right. So our guys do not, and we've got many expats there right now. We're in construction. We're building all the resettlement houses. You know, there's never an issue with the guys. Look, we get a lot of inbound calls from people who would love to work at our site because it is so easy to get to and it is so safe. Right. But I think Burkina, you know, I see a lot of positive things happening. There's a lot of pushback now in terms of, you know, pushing these guys back out again. Right. You know, I think it'll settle down and seems to have. And it's been a great year for Burkina producers. I mean, they have knocked it out of the park in 2018. Essakane, Semafo, Endeavour, some of the best operations in the world. Still a great place to do business. Yeah, I've always really liked Burkina. I've always thought it's a great place, and you know, you guys have got a great project on your hands. The metrics are already quite good, but it sounds like, based on these studies that come out in the next couple of months, are about to get significantly better. I'm very excited about it, I'll tell you. Okay, well, I mean, the market, for whatever reason, is giving Orezone a bit of a discount. It sounds to me like it's also giving the rest of us an opportunity. And anybody that looks at the company, you can take a look at the insider filings for Patrick and Mike Halverson and a couple of our other directors and some of our senior management guys as well, all buying. Yeah, so it's pretty obvious
it's pretty obvious these guys are comfortable in that the value is there. I'm comfortable it is as well. I think it's a great opportunity, good timing to be looking at Orezone. ORE is the symbol.